Yeah. Hey, Freddie, Freightfish, are we rolling? Yeah. Okay. Hey,
No.
Anthony.
5 tanks.
What?
5 tanks.
And what? We got it.
Hold
What were you just doing?
on. Selling some tanks.
What? So, like fish tanks?
No. Just south. I'm handling business. All right.
Okay. All right. Sorry. Well, we gotta do the thing.
Pay for these lights here. You know.
Yeah. Well.
Oh, that's right. We're recording.
Yeah.
This is the Economy Lately. I'm Anthony Smith, Chief Economist here at FreightWaves, and I'm joined by our buddy here, South Turk.
Yeah. Hey, how's it going?
And this is going to be one heck of a show because there's so many updates that we didn't get to cover last week that we have to get to today.
Yeah. All right. Well, as I say, let's dive into it.
And the first update that we have to talk about is retail sales. This got updated last week, and we saw that there was a downward movement of 1.1%. Not too many surprises here. When we look at retail sales, it still remains up 6% for the year, and I have to note that this report is not adjusted for inflation. But within retail sales, we saw some downward movement in vehicles and gas stations. And I don't think it's too much of a surprise because we saw those downward movements in the same kind of categories in the most recent CPI report, but we are starting to see some potential upward movement again in gas prices and, of course, South, those eggs.
The eggs, yeah. I was meaning to ask you.
Yeah, they're getting pricey.
Yeah, I know. I just bought like about 18 roosters. So
you're getting into the money-making business. So are you going to like rent the roosters out to like a few hens or something like that?
No. I've just been eating them instead of eating eggs for breakfast every morning. I've just been eating
roosters.
Yeah, eating roosters. Yeah. Not Rooster Back the Truck Up, by the way. I haven't eaten him.
Okay, I was getting concerned.
We're not cannibals here.
Okay.
Wait, is Thomas Wasson on today's FreightWaves? Never mind. Don't worry about it. Keep going.
So we also have other updates other than retail sales. We also have an update around industrial production. So the latest industrial production report, we see that there was another downward movement here as well. Now down 0.7% for the month, still up 1.6% for the year. But even though this is a much more upstream report, there were some downstream impacts when we look at durable good production for those consumers. We saw that there was a downward movement for that segment of 1.4%. And that's going to be a little bit telling because we're seeing that there is some slightly easing trends going on upstream as well as downstream. The next update we have to talk about is going to be housing starts, and this one is indeed interesting. So looking at overall housing starts, we see that the update showed that there was down 1.4% for the month and down 21.8% for the year. Single-family housing starts are going to be a weak point once again in the upcoming year of 2023. There might be some slightly stronger trends for multifam, but that has yet to be seen just yet. But really what we're seeing right now is that there was, of course, a significant pull forward in housing activity throughout 2022, and a lot of those homes have yet still to be built. And so we're seeing permit activity also coming down as well. Usually an indicator that there's going to be some future activity or contraction, and we're seeing that there's some downward movement in permit activity. So showing that there's going to be fewer homes being authorized, most likely, or constructed. But the big thing is that there was a large amount of homes that were pulled forward and being purchased. And so they have not yet been started just yet. But what we are seeing is that there's still an overwhelming backlog of homes that have yet to be built. So when you're looking at homes that are under construction or homes that have been authorized but not started, those are still at record highs. And so we're still going to see some flatbed volumes for this segment as those homes continue to get those construction trends ramped up here. Another update that we have to talk about real quick, initial jobs claims. This just got updated now in the 180,000 mark, which is definitely very impressive and something that you definitely want to see in the economy, that there's a strong labor market. But I'm not hanging my hat on this one. I don't even wear hats, South.
Yeah, exactly.
But if I did, I wouldn't hang it on this one. And this is just because this segment can shift quickly. And of course, we've all heard the news of all the layoffs in Silicon Valley and all these high-tech companies. And there's going to be some type of impact, of course, economically here. And this is definitely something that we spoke about many months ago. But really, these folks are usually very well paid. And when you see folks like this lose their job, it's going to be harder for them in some of these macroeconomic environments to find another role that would pay similarly.
So you're saying like these high-end tech executives might have to end up like working at like McDonald's or something? Or oh wait, no, all those jobs have been replaced by the AI they created. Where do people like that fit in today's world?
They will have to find some type of management role, and that's what they do. They can really kind of create value out of thin air. And I think that's really what was done throughout the pandemic, was value being created out of the thin air. And then that kind of led into inflation, because it's like, oh, value. But their value was fake, Sal. It was fake. And no one wants to talk about it. But we're talking about it now here. And there's another thing that we have to talk about, Sal. There's a release that came out, of course, GDP.
Oh, yeah. You know me.
You know me.
Yeah,
GDP, you know me. This is a segment that I think that we'll have to probably just save for another show, because it's a big report and there's going to be a few different standouts in this overall breakout here. So we did see that there was an upward movement for the fourth quarter, showing that there was over a 2% gain for the year. So definitely good news overall, but I'm not really counting on the GDP, because last time when we had back-to-back months of decline in the GDP, everyone said it wasn't a recession. So now I'm thinking, what's a recession? Now, if people don't want to use GDP as a recession indicator, plus this is FreightWaves, so you can have a macro recession without the freight recession. You can have a freight recession without the macro recession, but really it looks like we're going to have a little bit of both.
Wait, are we in a recession or not? I keep ping-ponging around.
Yeah, I'm going to go with yes, but going into 2023. But the other big thing is that there's going to be a lot of folks that say no because of all the other indicators. So I'm not sure what the common indicator to look at for is going to be indicating recession that a lot of people are going to agree on. It used to be GDP, but I don't know if that's going to be it anymore moving forward. But we can just call it like we see it. And right now, I'm calling a very weak consumer going into the remaining of 2023. Maybe they start picking back up into the latter half of the year.
A weak consumer. So as long as, like, if they went more to like Gold's Gym or something, they might.
The consumers have to start lifting. That's a whole nother conversation, Sal. The U.S. consumer probably should get back in the gym. I know I need to get back in the gym. And no one talks about health and fitness. This is a huge thing. We used to go to the gym back in the day. PE, physical education. I don't know if they still teach that in schools or if you can just kind of do that virtually, but that needs to be a thing.
How old are you again?
That's going to do it for this episode of Economy Lately. We have tons more content coming out throughout the rest of the year, I hope, or else they find us and try to cancel us.
Yeah. And also, viewers, write in to FreightWaves, 405 Cherry Street.
Should we tell them that?
Yeah, sure. They can find it online and share your opinions on if we're in a recession or not.
Oh, yeah. Make a comment down on the YouTube page.
We're only taking snail mail.
Oh, snail mail, sorry. No comments, but we'll see you all on the next episode.